Bring in Wall Street Alliance Group partner Aadil Zaman and PPAC Private Wealth Management Managing Principal David Dietz. And Aadil, I want to start with you. And I wonder if the real winner in this whole thing was Microsoft. You know, people forget they've got a $13 billion investment in OpenAI.
I think this was very well played by Microsoft because now Altman is back at OpenAI with a potentially more Microsoft-friendly board. There's just one board member there that was from earlier. And I think that the next step is going to be that Microsoft is going to try and get representation on the board, and Altman himself is going to try and get a seat on the board. And I think this also gives Microsoft a chance to reflect on its internal processes, and maybe they will start to develop their own AI more rather than being so dependent on OpenAI. But overall, I think well played by Nadella.
That's very interesting. Yeah, definitely swooping. And I love the Salesforce headline that we saw. They said, if anybody wants to leave OpenAI and come work for us, you just come right over. Now you've got the co-founder of Salesforce, who's also joining Larry Summers on the board of AI. This thing's just been, it's like a soap opera, David. This now suspected terrorist attack that we're now seeing at the northern border. You write, actually, before this, you say, in our view, the geopolitical tensions will continue to drive up oil prices. The world is on high alert. Ukraine, Russia, worries about what's happening here at home, all of that. Explain to me your reaction to, A, what we're seeing, this breaking news now coming out that we potentially have an attempted terrorist attack on our soil here in this country, but also the fact that we've got this potential deal for hostages overseas. Does this change your mode at all of how you feel about where we're at right now?
So unfortunately, the world that we are in right now, there's a lot of geopolitical tensions, and we are of the view that that is going to further enhance volatility in the market. And bringing it back to the market, I think in addition to that, what we're seeing is that with the 10-year Treasury yield being such a high level, the risk-free trade remains very attractive. So anytime you're going to hear a negative news, there'll be flight to safety and you'll see more volatility. We feel that investors are better off in hedging their portfolios by adding gold exposure. So we like the Spider Gold ETF that tends to do well during volatile times. We also feel that oil, because of geopolitical constraints, supply will be constrained and oil prices will go higher. And a lot of these larger oil companies whose break-even price on oil is even lower than where oil is trading right now will benefit from higher oil prices. Now,